Penny stocks under $1 are some of the most overlooked opportunities in the entire stock market. These are the hidden gems that most investors ignore, yet they often carry the highest upside potential if you know what to look for. Today, we are diving into a penny stock under $1 that has the potential to make you rich if you catch it early. This is not a random stock pick from a list of cheap tickers. This is a stock backed with solid fundamentals, a great future, and strong support from Wall Street analysts who see massive upside potential in the coming months. If you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. The stock we're talking about today is InflaRx, trading under the ticker symbol IFRX on the NASDAQ. InflaRx is a clinical stage biopharmaceutical company headquartered in Germany, with a footprint extending into the United States. The company is focused on developing innovative treatments that target the immune system's complement pathway, specifically targeting a molecule known as C5a. C5a is one of the body's most powerful inflammatory mediators, and it plays a significant role in a wide range of autoimmune and inflammatory diseases. InflaRx's mission is to develop therapeutics that inhibit this pathway, which could offer breakthrough options for patients who have limited treatment alternatives today. InflaRx's leading asset is vilobelimab, a first-in-class, intravenously administered monoclonal antibody designed to block the activity of free C5a. This drug has already received emergency use authorization, EUA, from the FDA in the United States for the treatment of severe COVID-19 cases. Specifically, Gohibic, the branded version of vilobelimab, is authorized for use in hospitalized adults who require invasive mechanical ventilation or extracorporeal membrane oxygenation. This gives InflaRx an active commercial product in the U.S. market, which is extremely rare for a sub-$1 biotech stock. It means the company is not just living on hype or early-stage data, it has a therapy already in use in a critical care setting, showing its science is not only real, but potentially life-saving. While vilobelimab has made strides, InflaRx did face a challenge recently when the company announced the discontinuation of its Phase 3 trial for vilobelimab in pyoderma gangrenosum, PG, a rare, debilitating skin condition. The decision came after the Independent Data Monitoring Committee reviewed interim data from the first 30 patients and recommended halting the trial due to futility. However, there were no unexpected safety issues, which still speaks to the tolerability of the therapy. Instead of continuing to invest in this particular indication, the company has chosen to reallocate its resources, an intelligent strategic move showing discipline and focus. Let's talk about the current stock price and financials. As of now, InflaRx is trading at just 86 cents per share. Despite the low price, the company is in a strong financial position. In February 2025, it raised gross proceeds of 28.7 million euros, roughly $30 million through a public offering of shares and pre-funded warrants. That capital raise significantly improved its financial runway, allowing the company to continue funding its research programs well into 2025 without needing to dilute shareholders further in the short term. When we look at the company's Q1 2025 financials, it's clear that management is controlling expenses responsibly. InflaRx reported no revenues from Gohibic product sales in the quarter, a slight drop from 36,000 euros in the same period in 2024. However, this isn't necessarily concerning. Since Gohibic is authorized under an EUA and sales go through distributors, revenue recognition can be tricky and inconsistent. The cost of sales came in at just 9.3 thousand euros, mainly due to inventory write-offs for expired product. Sales and marketing expenses were steady at 1.5 million euros, showing the company isn't wasting resources on aggressive commercialization until the time is right. More importantly, research and development expenses came in at 7.0 million euros, down 0.3 million euros from the previous year. This reduction reflects the company's pivot from the discontinued PG trial to focus more on INF 904. General and administrative expenses rose by 1.5 million euros year over year, mainly due to higher legal, audit, and personnel expenses related to the February financing. These increases are justifiable given the company's capital raise and preparations for upcoming clinical milestones. In terms of net financial performance, InflaRx posted a net gain of 4.7 million euros in the first quarter of 2025, up from 2.8 million euros in Q1 2024. That's a substantial improvement, driven by a 6.1 million euro gain from the fair value revaluation of the warrants issued during the public offering. Other income was also up significantly at 0.5 million euros, compared to just 36,000 euros in the prior year, largely due to research-related allowances and grants. The company reported a net loss of 8.3 million euros in Q1 2025, or 13 cents per share. While that might sound like a red flag at first, it's actually an improvement from the 9.7 million euro loss in Q1 2024. The company is clearly managing its burn rate more efficiently, and given its strong cash position of 65.7 million euros, comprised of 47.3 million euros in cash and 18.4 million euros in marketable securities, InfluxRx is well capitalized to continue operations for the foreseeable future without needing to return to the markets anytime soon. Another important point to highlight is analyst sentiment. InfluxRx has not gone unnoticed by Wall Street. In the past 3 months, 6 analysts have issued 12-month price targets for the stock. The average target is $5.40, a massive 535% increase from the current price. The high-end forecast sits at $10, while the lowest forecast still implies a more than doubling of the stock to $2. That's the kind of range you want to see if you're aiming for exponential returns. These analysts are not guessing, they're factoring in the company's science, current pipeline, financial runway, and strategic decisions, particularly the potential for INF 904 to disrupt large, underserved inflammatory markets. Well, that concludes our list for today. If you're serious about finding penny stocks with huge potential, InfluxRx might just be the breakout you've been waiting for. Be sure to subscribe and turn on the notification bell so you don't miss our next deep dive into more stocks like this with explosive upside potential. Thanks for watching, and we'll see you in the next video.